Well, hello there and welcome to another whiteboard session here at the Equity Trust Virtual Classroom. My name is John Bowens. In this segment, we're going to talk about using your self-directed IRA, solo 401k, or other tax-exempt investment account to either wholesale properties or conduct real estate options. And so first we're going to talk about wholesaling and then we'll talk about real estate options. They sort of parallel one another. What I find is many real estate investors who are starting with a small amount of money in an IRA. For example, with a new IRA making a contribution, you're limited to only contributing so much to that account out of pocket as a contribution. And in tax year 2020, with a Roth IRA or traditional IRA, you can contribute up to $6,000 when you're under the age of 50. When you're 50 and over, you can contribute up to $7,000. Now, in some of our other video training, you'll learn about a simple IRA or a SEP IRA or solo 401k and how you can contribute significantly higher amounts in one individual year. But a lot of real estate investors are looking for ways to grow a smaller dollar IRA in a meaningful way in a short period of time. And of course, you have to follow the rules associated with this. But by and large, by wholesaling or conducting real estate options, that is an opportunity to be able to grow a retirement account in a meaningful way. All of that being said, you do have to be cognizant of your IRA being viewed as running itself like a business and potentially being subject to unrelated business income tax. And in addition to that, when conducting these types of transactions, it's important that there's some skin in the game, if you will, that there's a significant capital investment that's made proportionate to whatever the gains are on the particular property acquisition. So those are just some of the pre-qualifiers or definitions to start with here. There's also a couple other accounts that are important to mention: the Coverdell Education Savings Account and Health Savings Account. So for those of you that are looking to save for your children's college tuition or K through 12 education in a tax-free capacity, you can only put so much money into those accounts in 1 year, but you can grow it in a significant way through wholesaling or real estate options. So let me dive right into what does this whole concept mean for those of you that might be not familiar. This is essentially an A to B to C transaction is what I'm referring to. So we have a seller here. This is someone who owns a property. Maybe it's a vacant house. Maybe it's an estate sale or probate. And the seller is in some sort of position to sell the property at a discount. And you as the investor have the opportunity, because you found this deal, to negotiate a discounted price and then be able to, from there, sell it to an end buyer. Let's call it an end buyer that buys and rehabs properties. Maybe they don't want to go out and hunt for transactions. They prefer to find someone like you, a wholesaler that has good deals, and they can acquire those properties from you in cash. So we have our seller, and then we have, of course, your IRA. Could be your Roth IRA, could be your traditional IRA. A lot of investors, for obvious reasons, like to use their Roth IRA for these types of transactions because of the tax-free upside. With a Roth IRA, when you put money in, it's after tax, it grows tax-free. And so as long as you follow the rules, when you take the money out after 59 and a half, you pay 0% tax. Could be a Coverdell Education Savings Account, could be a health savings account. So the retirement account is putting the property under contract. So you have a contract here, and the contract will be in the name of the Equity Trust IRA. So instead of that contract buyer listed as John Bowens, it will be listed as Equity Trust Company Custodian, FBO is in for benefit of John Bowens' IRA. Now, because I have my account with Equity Trust Company, I log into my Equity Trust Company account online. I key in all the information and I request that Equity Trust Company writes the check or sends the wire transfer out to open escrow for my earnest money deposit. So here comes the earnest money deposit. So my earnest money deposit must be paid for from my self-directed IRA. See, I couldn't write a personal earnest money deposit for a property and then have my IRA benefit. That money has to come from my IRA. So let's say I put a property under contract for, let's say, $50,000. and then I am going to sell that contract to a rehabber for, let's call it $60,000. And let's say I write an earnest money deposit to the seller, the end seller, that is A, for $500. So my investment from my self-directed IRA is $500. Now, some of you are active in wholesaling or doing real estate options might be thinking, wait a second, John, why'd you put $500 down? Sometimes I only put $1 down or $10. With a self-directed IRA, remember it's a tax privileged account. And there's no clearly defined guideline in terms of $10 is not enough, but $500 is okay. So it's a rule of thumb that's used in the industry. And so you want to make sure that you check with your tax attorney, maybe, or your CPA, to determine what they feel is in your best interest. But I know that a lot of investors prefer to put maybe a few $100s down on a deal so that they have some skin in the game, so to speak. So in this example, I'm saying $500. So $500 down, we have our contract for $50,000, and then that contract is assigned to an investor buyer. So the contract is assigned from B to C, from my IRA or HSA or CISA to the end buyer. So my self-directed IRA may not have the $50,000, but my self-directed IRA had enough for the earnest money deposit, secured the contract, and then assigned the contract to the end buyer. In this case, I have a $10,000 assignment fee. So that $10,000 goes back into the self-directed Roth IRA. And of course, because that's in my self-directed Roth IRA, there's no short-term capital gains tax. Now, I did mention at the very beginning there that you have to be careful that you're not running your IRA as though it's a business. So if you do too many of these types of transactions in 1 year, there is the possibility of triggering what's called unrelated business income tax. So you're going to want to watch out for that. And there's some additional training and education as well on unrelated business income tax. All right, let me give you a real equity trust investment example of this. This is Mark from North Carolina. He established an HSA, a health savings account. He put $500 in that HSA. He went out and found a property. He has a direct mail campaign, so he mails letters to absentee owners of properties, and when they reach out to him, he negotiates to buy their properties. So he found a property in North Carolina. He got it under contract for $10,000. His HSA made a $100 earnest money deposit, and then he assigned that contract to an investor buyer. He assigned the contract for $15,000. He made the spread of $5,000 after his $100 earnest money deposit was accounted for. He made a $4,900 tax-free profit. So that's $4,900 that went back into the HSA. Should he choose to take that out, so as long as he uses it for healthcare related expenses, it's tax-free. Now you can plug and play Roth IRA in here. You can plug and play traditional solo 401k. You name the tax exempt investment account, you can deploy this type of strategy. All right, lastly, real estate options. So let's talk about a real estate option, very similar to a wholesale type transaction. The difference, however, is a real estate option gives you as the investor or the optionee the right to buy a property at a future date at a predetermined price, similar to like a stock option for those of you that are familiar with that. So again, you put a property under contract and you have the right to buy the property at a future date at a predetermined price. Let me give you an example of this. An investor here at Equity Trust by the name of Christine, she goes by Chris. She has a Roth IRA. And this past year, Chris with her Roth IRA had an opportunity to put a property under contract with an option. But it wasn't just like a residential property, for example, which is what we typically see. It was actually a commercial property. In fact, it was a storage facility. So her Roth IRA actually had a option contract on a commercial property. It was an A to B to C transaction, just like you saw before. So the seller, who is player A here, owned a commercial building. And Christine's Roth IRA, Christine on behalf of her Roth IRA, had an opportunity to get that property under contract. It was a distressed situation, if you will. And Christine had an end buyer. So in her network, she knows investors who are looking for commercial real estate deals like this. And so she brought player A and player C together using and leveraging this real estate option. So her Roth IRA put $2,000 down on the deal. Her Roth IRA wrote a check to the seller for $2,000 to put the property under contract with an option. That option, she had the right to assign the option contract to anyone that she wanted to. So what she did is she assigned the option contract to the end investor buyer. That end investor buyer bought that contract for a $20,000 assignment fee. So she invested $2,000 and made a $20,000 tax-free profit in her Roth IRA. So as you can see, the real estate option vehicle parallels the wholesale transaction vehicle. However, from a legal documentation perspective, they are two different transactions. So you would certainly want to make sure in terms of preparing a real estate option contract versus a traditional purchase agreement that you speak with your real estate attorney to help you through this process. And again, in this scenario, Christine's Roth IRA put the property under contract, assigned the contract to the end buyer, and then she was out of the deal, her IRA was out of the deal, and in the Roth IRA was left a $20,000 profit, which of course is tax-free because that's in a Roth IRA. Hope you enjoyed our video here on wholesaling properties and real estate options with a self-directed IRA or other tax-exempt investment account. Again, I'm John Bowens with Equity Trust Company. For those of you who aren't familiar, we're a directed IRA custodian based out of Cleveland, Ohio. We've been in business since 1974, helping real estate investors since the early 80s hold real estate partnerships, and other alternative assets in their self-directed IRAs, 401ks, and other tax-exempt investment accounts. Feel free to like us, subscribe to us. Feel free to subscribe to the YouTube channel here so you can get all of our additional videos and receive alerts when those come out. Check out our other videos, or you can reach out to us directly. We have trained associates that can answer your questions, provide additional information, and provide additional education. We're not here to provide tax, legal, or financial advice or serve in the capacity as your attorney or your financial professional, but we are certainly here to provide some education and information. I hope you enjoyed us on this last whiteboard session. Thank you so much. We look forward to seeing you soon.